If you're a sole trader in the UK, the way you report your tax to HMRC is about to change. From April 2026, many self-employed people will no longer submit just one tax return per year. Instead, they will need to send updates to HMRC every quarter using digital software. This change is called Making Tax Digital, often shortened to MTD. In this video, I'll explain exactly what MTD is, who it affects, and what sole traders need to do before the new rules start. Making Tax Digital is a government initiative designed to modernise the UK tax system. At the moment, most sole traders keep their records in whatever way works for them. Some people use spreadsheets, others rely on bank statements or paper receipts. At the end of the tax year, they gather all that information together and submit a self-assessment tax return. Making Tax Digital changes that system. Under MTD, businesses and landlords will be required to keep digital records of their income and expenses and use HMRC-approved accounting software. Instead of reporting your income once a year, HMRC will receive regular updates throughout the year. The goal is to make tax reporting more accurate and reduce mistakes. Making Tax Digital for VAT has already been introduced, and many VAT-registered businesses are already using the system. But the next phase is Making Tax Digital for income tax, which affects sole traders and landlords. This will be introduced in stages. From April 2026, the rules will apply to individuals with business or property income above £50,000 per year. From April 2027, the threshold drops to £30,000. Even if your income is below £30,000, it's still important to understand how the system will work. So even if the changes don't apply to you right away, it's still important to understand how the system will work. Under Making Tax Digital, there are three main requirements. First, you must keep digital records. This means recording your income and expenses in compatible accounting software. No more relying on paper records or disconnected spreadsheets. Second, you will need to submit quarterly updates to HMRC. These summarise your business income and expenses for each 3-month period. They are not final tax returns, but they give HMRC a running view of your business performance throughout the year. Third, at the end of the tax year, you will still need to complete a final declaration to calculate the tax you owe. So instead of one return, many sole traders will end up submitting 5 submissions per year. That's effectively 5 per year. The good news is that most accounting software will automate much of this process once your records are set up properly. HMRC says the goal of Making Tax Digital is to reduce errors in tax reporting. According to government estimates, billions of pounds of tax are lost every year because of mistakes in record keeping. HMRC believes that businesses will make fewer errors and have a clearer picture of their finances throughout the year. Supporters say it helps businesses stay organised. Critics argue it increases administrative work. But the changes are coming. The best thing sole traders can do right now is prepare early. Start by keeping clear digital records of your income and expenses. If you currently rely on spreadsheets or paper, it may be worth moving to accounting software sooner rather than later. This makes the transition much easier. You should also review your income levels to see whether you are likely to fall above the £50,000 or £30,000 thresholds in the coming years. Planning ahead now will prevent a lot of stress when the new rules come into force. Making Tax Digital represents one of the biggest changes to the UK tax system in recent years. If you're a sole trader, freelancer, or consultant, it's important to understand how these changes will affect you and start preparing early. If you'd like a detailed guide explaining how MTD works and what steps to take, you can find more information on the ACTEC website. Thanks for watching.